Hello, good morning. Welcome to another video of ES Futures Trading. Today is Friday, August 4th. It is 8:57 a.m. Non-farm payrolls have been released just about 30 minutes ago. It is rare that you can do something in this kind of events because the volatility is quite high. Um, they're also having something are or the risk is high in this kind of events. But time after time, every once in a while the market show its hand or can give us an opportunity. There was one today, and I haven't seen this in a while actually. And what was this? What was is uh, this low here just before the opening. No, before the number. You got this thing. This market was being bought here in this area in the previous period, at the low of this previous period. By itself, it doesn't mean anything. What happened after is what was the giveaway. Is the market has a spike, has just very violent reaction to the number. The market was something here, it just gives us back to the downside, and in less than a second, no microsecond, the market was bought from here, and in the next second it was up here, and then it kind of like a rally, somewhere in here. But the low was exactly at this low. This low by itself was very questionable. And now we have this event and another low right here. Why this is important? Because of this is a late pullback. I wouldn't call it pullback really, but this is the low of yesterday. I have my doubts of calling it pullback low here, but let's call it pullback low, right? Because it becomes relevant when the market was bought here and somewhere in here, just the market, I guess was POC. Over that POC start to sell from here. It started to sell, and there was something here. Now you could see the market going, and the potential destination of that trade was just this low or somewhere in here. Okay, the areas to monitor here for continuation was last, settled, and finally this number, this low here being taken out. If this low is, as soon as this low is taken out, that's an out. Okay, nothing else. That is the trade. Actually, staying for more is just looking for problems here. Now, the upper side. No, I'm not looking for anything else here. No, I'm not trying to make sense of anything, but this high is kind of questionable. This is exactly yesterday's high. Now we have a spike. We have a spike here. Notice this, okay? This is a spike to the upside, but this is inside the overnight session. It's inside the overnight session. Inventory before the number. Notice how this inventory was long, but it was being rebalanced after. Afterwards, just in front of the number, it was being rebalanced. Oh, look at this. Good amount of volume here. 400k. This is good. This has a lot of volume here. There's a lot of volume here. Probably from this high numbers here. This is Amazon and Apple. The spike, a spike would be this. Okay, if this range of this period would be above this overnight high, that would be a spike. Okay, that would be a better spike. Right now it's still inside yesterday. So, and the reaction is this. Right, the reaction to the number is this. More likely a bad number because it's to the upside. And where the market opens is the question here. If the market is going to open above the spike in this area, that is somewhat positive for the market. Market opening below the spike is negative. It's going to take a lot for the market to open down here. These periods, these lows are considered fixed only if this movement, only if the market revisits these levels in regular trading hours. Right now, still, this is not good. It doesn't have to, right? But as long as these are not traded during regular trading hours, these levels are still. I'm going to keep these ones still here. The relevance of this late, if this is a pullback, right? We are going to call it a pullback. If the market trades or builds value above this level, that keeps the trend from yesterday. Goes to the upside. In the intraday, right? That keeps that movement, this momentum from yesterday. But overall, if you see the bigger picture, value is lower. Okay, value could not, after all this movement, it couldn't move higher, or at least to overlapping to inside or overlapping to lower relative to the previous day. Value was lower yesterday. That's not a good sign, because what we have in, let me get my charts here, my we have a market to the downside. Okay, the trend is to the downside. There is a gap here in this area, there's another gap here, and the market right now is right at the center of these gaps. Have a gap on the upper side, gap on the lower side, gap right there. Also, notice how these distributions are being kept here. You have a lower distribution here. You can I am going to enclose so you can see it. Look at this distribution here, and this another one up here. Right? Those are two distributions. What can happen here is if the market trades or closes the distribution, that put the low or the lower distribution as a potential or as an ultimate destination trade. If those distributions are closed, notice how this day is what separates both. Yesterday traded inside this day, but it didn't get back. And also this is support, right? The 4,500. Now, all of these longs here, notice how the firecracker effect has been very important here, has played out here. All of these lows that were very close to each other. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 lows. 10 lows have been taken out. All of this inventory has been removed. All of this is history now because of this break we're having here. You have 1, 2, 3 days going to the downside. You have a downside trend here. How long it can last, it will depend of the volume that it can attract. We are saying we are seeing that volume. It's not that the market is going to the downside, but there's no volume. So what it looks is like more like a long liquidation that new powerful selling. Right? There are no more positions being opened. It's rather liquidating the longs rather than new selling. And all that because of volume. The odds are high. I mean, that's what's happening. However, there's another situation here. We have the downgrade of the US debt that trigger this gap, this day here. Sometimes also we have these knee jerk reactions the market have in front of something. That piece of news remove all this inventory. Right? But this is just news. This is not market tend to react, just have a sharp reaction to the news. And when the market does that, the market does that, it's not rare to see the market, retracing the range that has been. No, to retrace that range, right? Because you have all this here plus the gap. It's not rare that happens. Yeah, it is very very common actually. I'm not saying that's going to happen, okay? But the reaction to the news is what I am trying to highlight. It was just you had the news and boom, that thing happened. Now, from yesterday, before going to yesterday, now, notice what's happening in the day. We have this 14 month range here. This is June high. Market is very close to this high. This is a breakout here. There's a 14 month range breakout here, and there's another breakout. This is just upside continuation. What happened in previous? What happened in July here, and now we have August. We have no excess relative to this day, and August in just 4 days has we have a inside bar here in the morning, and this month can come all the way down to here and still be an upside market. But there's not much change in the monthly. The weekly, I was just playing with this trend line here. Just put it here. There is nothing here. The week is not over yet. We have a 3-week range here. Notice we have this range here in the upper side, and another 4-week range in the lower side. If the market re-enters this range, the opposite side of the range becomes destination trade. What happens is we have to monitor, because it can be a lookout or look inside this range and then just come back into this 3 week range and target the opposite side, which is the weak high, or a high that has no excess relative to this high here. The daily, we have seen these two trading range, the gap here, very volatile. Next week we don't have too much earnings. We have CPI on Wednesday, PPI I believe on Thursday, if I'm not mistaken. Okay. Now I'm going to come back. I'm going to go back to market profiles. We had something yesterday. I hope you have paid attention yesterday. This day we have a big break here. I am paying special attention to what the market can do relative to these distributions here. The market can close this distribution. It is strong enough to close this distribution because we don't have value here. Value is to the downside, and it couldn't be moved higher. Okay, that's kind of like a negative. That's negative for the market. And now I'm going to expand the profile here. This one. This was relevant for what happened yesterday. Because the market was bought from this low here, and the base of all of this movement was held back in the same way as today, as it was yesterday. The base of this movement was held back. The next one we have here. I have removed. There was something here yesterday, but these two lows are not good. This one coming from the overnight held and the last one coming from previous period held back. The excess and the high, the excess and the low is questionable, both of them. And then what happened was liquidating here, but this part, this part here play an important role in what happened here. When the market closed, looking into what happened yesterday. When you have a market that's trending to the downside, what traders do is they sell rallies. Well, selling rallies. The 4,500 was an important reference. The market couldn't get to 4,500. When the market couldn't get to 4,500, it's time to adjust. If you have something, I did something here. I was very nervous here during this day because the market went in the opposite direction because I was trading towards the market getting at least 4,500 or somewhere, maybe somebody here taking what this okay, it was taking my trade was taking the opening. It did something. Then there was one trade, the other one all to the downside, the other one was here. When the market took this low out, that was good. Also, there could be some liquidation here. The liquidation of these lows here. The ultimate destination being this D low here. And when the market, the thing is, You always have to monitor your trade, right? You always have to monitor your trade. It just died. It just died here. It was very very. It didn't have it. I remember from the opening as well. The selling wasn't that strong. So, and on top of that, this is a rotational day. They also having rotation were high yesterday, and once the type of day, once I label a day as a rotational, they're also having more trades, more opportunities are high, but these opportunities are not that extended. So I was aware that I'm just close somebody in here. After that, the market keep going to the downside, but no, it was the same way as I closed as soon as the market took this low. I closed. The same thing happened when the market in here. What was my no? My reference here is what I didn't trade the reference, but I traded the market here. It just didn't have it. It didn't have it here. It didn't have it. There was just no, and and keeping in mind that the market was very elongated to the downside. Inventory is very short. You know, the inventory of the market is very short now. Now, something else here. After this downgrade, Fitch, we have this market. Where are you? Where are you? This one? No, this is not. What about this? No, what about this? Come on. Where are you? Oh, okay. Here it is. This is the 10 and this is the 30 years bonds. Notice what it is at now. It is getting now these two are in sync now. You know, it wasn't case. It wasn't the case until now. Because this was higher, this was lower, this was lower, it was higher, this was lower. They were each doing its thing. But today, but later in the last couple of days, these are in sync actually. Both of them, both of them are in sync. Dollar is in short covering mode. Um, Crude oil was rebalancing, and gold is trading range here. And what is important here is to me is that this low here has been taken. That's one, and it's getting very close to this historical low here. This is last year low. Same goes for the 10. When this market go to the downside, it tends to drag the market. Not here, for example. You have this break here out of this range here. This you can see how many times the market was bought here. 1, 2, 3, 4, 5, 6, 7, 8, like 10 times. There is some reaction to that. But now it's getting closer to this low here. If the market comes too close to this, it can drag the market lower. I'm paying attention to this now. What happened with dollar as well? If the dollar keeps weakening, this is very bad for big companies. These big tech, big cap companies is very bad. That's not good for them. And those companies actually are the ones that are moving the market to the upside. We have this tremendous rally, and this is basically carried for these 4 or 5 companies, or 5, 6 companies. Um, where are those? The big, the FANG, Apple, Netflix, Tesla. Meta, Amazon, Nvidia, and just look at this movement. You know, look at Apple. A lot of money has moved to. Notice that this trend here. You know the daily trend. You can put a trend line here, all the way up here, and it's been bought from that trend line. All the money is going into this one, and weak dollar don't favor actually these things. You will kill the earnings of this company if the dollar keeps going low. All right, that's what the show. I want to show. Now, going into the opening, what is my focus here? Overnight inventory is. I mean, here it has been rebalanced. Right? We have this was long, this was long, it was rebalanced here, and now has got long again. The last period has 100. That was big. That was huge, right? 100,000 total, almost half of a million, and that's good. That's good. That's a good volume we have in the overnight. These lows remain questionable. This one as well. From this day, there's one intraday low here. This is a rally high, kind of late rally high. But what? Oh, look at this. I have this one. I don't have this thing. Let's pay attention to this one as well. In the same way, also we have this low. This could be something. This is not just halfback. There, maybe there is something here. Because this is a rally. We had a market breaking here. No, I will just use halfback here. There's a reference. What the market does around this number. It's a little bit more relevant than being just halfback here. But my main focus on the upper side is this level here. Is this level here. If the market can close this distribution, there would mean that there is some the market has changed. The market is opening at very high here, opening here actually weakens this high. The late pullback low is down here. The market is opening inside or above the late pullback low, which actually keeps this rally intact. The upside movement. That's what I mean. Not the rally. The upside movement from yesterday. All right. What else can be seen, can be said of today? I guess the balance. You know? Markets are always looking for a place where two-way trade can take place, which is when they get in balance, but rarely stay in balance for long. The market gets outside of this range, that's out of balance. I know what are the odds, for example, on for trading inside this range. I have these 2 days here and adding something here. You know, getting trading back inside this could target actually maybe taking some of the gap. Remember what the traders have been doing lately on weekends, you know, on Fridays. There was no volume on Friday. They were just using that to rally, to 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 move the market higher on Fridays. They just do what works until it doesn't work anymore. All right. Okay. The market is going to open in a couple minutes. Unless there's any questions, I guess that will be for today. I have this reference here as my main reference in the upper side, and the lower side I have these lows here, these two one, which has been traded through in the overnight. The low of the range, the 4400 is really close to this low. And markets usually don't take this relevant reference the first time they trade towards them. The 50 moving average also is not that far now. It's somewhere. Okay, I can see this some far. It's about 100 points to the downside. Okay, I wish you guys a good trading day. Stay safe. See you another day. Bye bye.